My name is Claude, and I'm coming for your job. I'm coming from your job in software. I'm coming for your job in banking. I'm coming for your job in cybersecurity. Is anyone safe in this AI market? Single stock risk has never been higher. IBM, 320 to 220 in a heartbeat. And Claude couldn't come on the show at 9:30 because he's doing a special presentation. Folks, we got a lot of disruption in the market, a trend we've been trying to follow, and unfortunately, it's still the trend. We'll sprinkle some earnings in there. We'll sprinkle some ratings. We'll get some tickers from you guys. We haven't done that for a while. 8:35. Welcoming back Cameron Dawson, CIO, NewEdge Wealth. Get her perspectives on the market. It's me and the Brunster on this Tuesday, pre-market prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Okay, the pre-State of the Union rally got up to 68.75. We're flat on the day, maybe looking for a choppy day. A choppy day would be a good day, but we're flat on the market. The buck up 21 cents here, trying to get through the $98 level. TLT hanging out here near the high of the move. Can't complain, up 12 cents, 89.86. Crude will not give in, making a new high for the move. Now up 50 cents, 81.40. Not good for inflation. GLD and SLV taking a breather. GLD down a little bit more, 728 at 474. SLV down 71 cents, 79.86. That's about a little less than 1%. And you Bitcoin bulls, where are you? You got to get out there and defend that low of the move. Maybe the guy at the gym was right. That was shorting Bitcoin up there around 67K. That was Jim. Ken. I did not see him at 5:30 this morning. Okay, folks, you know these charts are brought to you by TradeStation. Born to trade, chart, analyze, customize, all in one program. Trade smarter, move faster, stay in control with the platform built for serious traders and people that want to be serious traders. Okay, Brentster in the hot seat today.
Woo!
How you doing on this Tuesday?
Good morning, pre-market prep, and good morning, Claude. How are you doing? How are you doing this morning, Claude?
I am doing good. I'm going to have my robot go upstairs and get me a cup of coffee or something like that. I don't know, Brent. I mean, have you been doing the news a long time?
I've been doing the news quite some time, yes.
And you have seen single stock risk, right? Has there ever been a point in your career where a company like IBM, itsy bitsy machinery, just annihilated? Absolutely annihilated.
What a move. 13% lower yesterday on the close. Concerns, yes, you guessed it, with AI. We've been talking quite a bunch about IBM and the potential for AI disruption. Yesterday, Claude code concerns for IBM. Some cybersecurity concerns are still hanging around too for the same reason. Zscaler, Datadog, Cloudflare, CrowdStrike, also big losers yesterday. Mitch was giving us a nice heads up that there is a Claude code event today. I believe it's called the Enterprise. That is going to be the briefing. Enterprise Agents starts right at 9:30 a.m. Eastern time today, right at market open. Mitch was convinced that this event, ahead of this event today, yesterday, is why IBM, yes, and maybe some of the cybersecurity names were trading down yesterday. Joel, you right back at you here. You when we see Wells Fargo or Bank of America, and we'll get to the banks a little bit later here. Whenever we see like huge moves in Bank of America, like a few dollar move or something, you're like, this is Bank of America. Like, are people gonna stop doing banking here? And we're seeing a similar story playing out in IBM here yesterday. What did you think about this move in IBM yesterday?
I mean, it speaks to this market environment here, and no one is safe. I mean, 320 to 223 in a heartbeat. I mean, you had a couple down days. I think the only thing that you got to be on the lookout for, because it's so, you can see these moves, they get going off the open, but is like after it have this move is, if it sits still for like 3 or 4 days, right? That's what you had when you came down off like 310. You had to break, and then a couple days it got paused, another break, couple days of pause, another break. So I think the best thing that IBM shareholders can hope for is at least a couple days of consolidation. The PE is low, but they're worried about the E. I mean, it's low, it's reasonable, but the street is not looking at earnings now. They are worried about earnings 6 months, 8
Great
months, a
point.
year, 2 years on down the line. And
Great point.
just real quick, Triple D would love to be here, but he can't talk. Yes, folks, he has strep throat and he is as sick as a
Ouch.
dog. So I want everybody on your Twitter right now to text something nice to Triple D. Tell him to feel better.
Send the good energy at our man.
He good karma. Good karma. Maybe go AI and find some good remedies for strep throat and send them to him. So that's what, that's
more
what
doctors.
I want you guys to do today.
That's what this world needs, thanks to AI. More doctors. I want to get into just a little bit about like what actually happened with IBM yesterday. So the sort of like report, and kind of remember that this wasn't like breaking news necessarily. This is something that kind of trickled out. But the circulation yesterday that started IBM dipping so much lower a little bit later in the day. We heard Claude Code can now do COBOL. COBOL stands for Common Business Oriented Language. Ooh. Some of IBM's sales come from mainframe systems and consulting services that support COBOL. This is used widely in banking and other large-scale transaction processing, and has implications for cybersecurity also. Now, we were wondering, shifting gears here a little bit, Joel, we were seeing the big moves lower in the bank stocks yesterday, in JP Morgan and Bank of America and Citigroup. Also, we still have these private credit fears mounting in a name like Blue Owl, ticker OWL. Yesterday, we were like, okay, we were looking at Owl, we were looking at some of the banks. We thought it was largely some of these private credit fear concerns. After I sort of dug into the Claude Code thing and how it could be starting to do COBOL, I started realizing, well, if a major use for COBOL is in banking, would it make sense that Bank of America, Citigroup, JP Morgan were also trading lower on this? And, there's a debate here. Is this going to be more of an efficiency for the banking industry for big banks? Or is this going to be more something that is a concern, a disruption concern? And I think that still remains to be seen here if we're talking banking stocks.
Market doesn't care at this point. What we learned is that they're not waiting around.
Shooting first, asking questions later.
Yep. Big candle, JP Morgan, non-disclosure. I've had it for a long time. Want to sell it always, but just have to, ride the storm out. I mean, some people, Claude doesn't make money and Claude doesn't do this. Folks, who knows what Claude can do? And that's the thing. It's the unknown in the market right now.
Exactly.
It's unknown. You can say, oh, there, this, and then what did Claude do? Did Claude ask like ChatGPT, when can we do our this call to be most disruptive to the markets?
9:30, easy.
You're like, oh, you got to do it on 9:30. Oh, those opening orders in there, you gotta, gosh. You could definitely mess with some people up. So, keep it on. I mean, I don't know if you're a news interpreter and you can tell what's going on, but I mean, you talk about the timing of this, and 9:30. Interesting time to be doing this.
Absolutely. I know, right? Another software play here. Thanks, Louis Sykes, for pointing it out in this way the last few times he's been on for the Hive sponsored Crypto Corner segment. Guess what? It's Bitcoin. Bitcoin also has some, Bitcoin is software, of course.
It is.
Yep. And Bitcoin just continuing to leak here. Yesterday low, actually this morning's low, $62,710. I see we kind of have rebounded back over the 63,000 level, but I loved what Anne Marie was saying yesterday, Joel, about Bitcoin being the proxy for the speculative market. I think, we've been kind of kicking that idea around, but she was able to say it yesterday on PreMarket Prep in a very deliberate way, and it really struck me when she said, this is an indication for how people are speculating.
Yeah, I mean, it is the most speculative, perhaps, of all the instruments that we have out there. Everyone. This is the thing, and I don't want to get into it with any technicians out there, but there's a lot of them. They're like, yeah. I mean, this is the bottom. We're bullish. Put Bitcoin. They're back to the moon and this and what the hell are you looking at? There's a 200-day moving average. There's a 50-day moving average. You got a single bottom to lean on. And that's the thing with technical analysis, right? Some people rely, you could go back. I could go to a monthly and say, there's a retracement here. Oh, this is just a healthy retracement of the move from the whole time high to that time low. To me, big red candle, big red
Huge.
candle, small red candle, big red candle, big red candle.
Whew.
I mean, these things, it ain't going to reverse until you get at least one monthly green candle. When's that coming? Well, it's not going to be this month. Who knows about April? But it's a great point that she made yesterday, and looking forward to having Anne Marie on the show more. She's got some great insights into the markets.
Awesome. So let's set up a little bit of a preview here for today. We have a handful, maybe a few handfuls of important events that are going to be happening today, including the State of the Union here tonight by President Trump at 9 p.m. Eastern time on CBS. You can watch it on whatever way you access CBS. That's including YouTube. I'm sure it's going to be on YouTube too. Last few State of the Unions have been about an hour, maybe a little longer. They have been kind of getting longer in length, if you can imagine. So my maybe uninformed guess is that it might not even start at 9 p.m. hard. It might be a little bit later, and it could be maybe an hour and a half or so. The economy is going to be the focus. Maybe, stating the obvious here, but we haven't heard a ton of what Trump is going to talk about tonight with the State of the Union, but a lot of people are going to be watching it. The main focus from what we heard the administration so far is going to be the economy. Joel, any thoughts here on how we can prep some of the YouTube pre-market prep community for the State of the Union later today?
Is he going to say anything bad?
I mean, he's probably going to talk about the Middle East and Iran, right? He's probably going to talk about wars that he's helped facilitate an end toward. Some people,
there's a lot he can talk about, and it's impossible to predict. I just take, whether it's, George Washington, Abraham Lincoln, John F. Kennedy, or Trump, giving a State of the Union address. No, I wasn't around for Abraham Lincoln. I did do an impression of Abraham Lincoln, though, in a talent school in like third grade. I do remember that, or maybe fourth grade.
Maybe
I think they're going to say something good. Something good, something to feel good about the country and good about the GDP and, all the things that are good and, how we're on our way to, 20%, GDP and, things like that. So that's the way I feel it. It's certainly, unless he has a big mess up or something, then, I think markets historically tend to trend higher towards these things are higher in anticipation that good things are going to be said.
Yeah, sure. I hear you. And then Joel, we also have like we're not excuse me, we're not really too concerned about the econ data for today, although we did just get the ADP weekly job report showing 12,000, about 13,000 jobs were added for the first full week in February. But there is a ton of Fed speak today, Joel. You got a long list of a bunch of Fed heads that are going to be speaking. Any highlights from some of the Fed speak that we're going to be getting on our radar here today?
I don't know all these characters. There's Bostic, there's Collins, there's Waller, there's Cook, there's consumer confidence or lack of at 10 a.m. Barking. I mean, to me, I don't know what to expect for them. I mean, some are hawks, some are doves, some are in the middle. I just say be prepared after Claude for some wild movement, and it's hawkish talk. Well, the market goes down. Dovish talk, the market goes up. I mean, that's what you're going to see with those things. You'll see your normal gyrations, the movement in the speeches. That's a lot. So hard to interpret. I think overall, I mean, aren't we all like breaking news here? Like unemployment's going up here. I mean, I'm not even talking about AI here. I mean, how many times you said Amazon laying off like 30,000 jobs? I mean, you are hearing massive layoffs in the tech industry. And the scary thing is that some of these software engineers are making 350K a year. I don't know what the heck they're going to do. I really don't. But I think unemployment.
Do you think that some of the job cuts were corporations getting ahead of AI, or do you think it was just a coincidence that we started hearing about a lot of job cuts kind of like toward the end of last year and into the beginning of this year?
Definitely forward looking, in my opinion.
I gotcha. Joel, we just got some breaking news here. A press release from Warner Brothers Discovery WBD confirms receipt of revised proposal from Paramount Skydance PSKY. I'm looking at the press release. There isn't any actual like price in here. Let me just read this. Following engagement with PSky during the 7-day limited waiver period, we received a revised PSky proposal to acquire WBD, which we are reviewing with our legal and financial advisors. We will update our shareholders following the board's review. The Netflix merger agreement remains in effect, and the board continues to recommend in favor of the Netflix transaction. WBD shareholders are advised not to take any action at this time. WBD not really moving here right now following confirmation of this. Netflix not really moving here either.
I think I just want this to be over, Brent.
Good luck with that. This is we're going to be talking about this. If this back and forth continues, we're going to be talking about this for a good more year, Joel, probably, at least, unfortunately.
I mean, the street has spoken what it thinks of the deal for Netflix. So I don't know what Paramount Skydance can do to, I don't know. I just WBD. We said it before. We said it to shareholders. Maybe we said it $1 lower or $2 lower. I mean, yeah, you want to hold out, for 29 or 30 or 32 or whatever. I mean, at this point, you almost think that, if they say we're going to go with Netflix, the Netflix, will come up to that price. So never ending saga here. I'm sure Netflix just wishes they never would have gotten into it. Just sick and tired of it. I wish it was over.
I'm sorry, Joel. I'm sorry. I wish we could do something for you. Let's get to the big news of the day, folks. AMD and Meta announced an expanded strategic partnership to deploy 6 gigawatts of AMD GPUs. This press release, folks, you can see it really clearly on the AMD chart here, hitting right at 7 a.m. Clicking over to AMD shares, got it on your screen right now, Joel. Stock popped a good, it's popped $30 initially, has been faded. Shares trading around the 215 level or so. Maybe take a look at the chart, Joel, and then I'll go into some of the details about this deal between AMD and Meta.
A lot of people getting a lot of money back here. 227. That is your pre-market high. Now, that's a good thing. I mean, 227 would be right in this area. That's the good news. The good news is that it traded up to 227. Where's my horizontal line? Just to give you a perspective of where this traded to, right in the middle of this gap area. So, boom, 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 coming down. There's where you popped up to. The good news is it's up 17 bucks. The bad news was it was at 227. When I look at these kind of moves and they pull back so far from the pre-market high, I think, and not always, I'd have to ask Claude about this, but a lot of times it has a hard time getting back up there because you got all these you got bag holders from the run, new all-time high in January. You got the bag holders that bought the dip at the end of January. Then you got the super extra large, really big bag holders that bought it, on this dip in February. And here you're back at 227, you leak 14 bucks. To me, right now, just with my naked eye here, I'm like, I've been licking my chops since this ain't got back to 220. You got a triple top there called the quad top, 218 to 220. If you and also the 50-day moving average at $5 away, you go out there when it's 219 bid, you go out 220, you get lifted, then they want, perhaps take it up to the pre-market high. But that's what I'm looking at. Where to buy this thing on the downside? You short-term traders, drill down on your shorter-term charts. You can do that on your own. The top of yesterday's range is 199.38.
So as far as I can tell, I have on my desktop computer right here that I'm looking at, I have the Meta and NVIDIA release, and I have the AMD and Meta release. And I'm just doing some comparison. And like these are effectively, as far as I can tell, the same releases. Meta is partnering with AMD to rapidly scale AI infrastructure and accelerate the development and deployment of cutting-edge AI models. The difference, as far as I can tell, is that AMD, with its release, AMD gave that 6 gigawatts deployment figure, which is important. They're giving, some value here. The Meta deal, NVIDIA deal, they didn't mention that. They both did say these are multi-year, multi-generation partnerships. And we did have a number of stocks moving. Of course, AMD moved higher on this, sharply higher. Of course, Meta moved lower on this. All that spend. NVIDIA moved lower. Also, Broadcom, AVGO also moved lower. Competition fears, assuming. I don't know how effective, competition AMD is going to be necessarily. Also, the memory names, the SanDisk like sort of moved. Micron moved a little bit more in as far as the memory space goes. Joel, any of the charts here from some of these peers that I just mentioned, NVIDIA, Broadcom, Micron, SanDisk, Western Digital?
I'll give some general thoughts, and then I could go down on the individual charts here. But number one, let's just go to Meta. I mean, they're punishing the spenders here. I mean, look at that thing since that earnings gap fill. I mean, come on. Tell me that's a bullish chart there. You lost a 50% retracement. Sure, you can leave on that double bottom here. Yeah, everything's rosy. S&P's going back to 7,100. Buy all the Meta you can, but not investment advice. I mean, the spenders are getting punished. And then also here, the little pre-earnings run in NVIDIA interrupted momentarily here. So now not only are you seeing single stock risk, but you're seeing, rotation within the sectors themselves. They're not all moving in the same direction, right? So now, and I guess we've been seeing this for a little while here, what's, good for AMD might not be good for NVIDIA. I mean, you're seeing that kind of, the kind of thing. But the stocks, Broadcom, way off its all-time high. I'm looking, trading down at 3.25. Where's yesterday's low at? This got a chat. I mean, if you're a believer in a double bottom before it happens, 325.32 was yesterday's low. Meta is just a mess. I'll skip that. NVIDIA, and we had J.R. Romero on the Stock Trader Network, and when you see such an obvious level, it's almost kind of scary. And there you go. This 194 yesterday, we were calling it out in the STN room, got up there yesterday and failed again. If you guys want one stock and you want one level to indicate everything's okay, we're rosy, boom, breaking out 7,000, 7,200, 7,500, 8,000. Let's see a sustained bid over 194 in NVIDIA here. What a level. Trading range, not only you've been 170 to 194 going back since, you had a couple at the end of November, folks. That's a trading range. It's consolidated before. You have to assume at this point, until otherwise notified, it's been in a major uptrend. It's had a pullback, and it's consolidated. I would not make a big move on the headline number. I would like to see, I think the guidance is going to be key. What are they doing with this Blackwell chip? And folks, if you think I don't know about the Blackwell chip, you must be mistaken. But just what does it look like? Because they have come out and they have beat, and they said, not only are we beating, we just got more demand. So I think that's going to be important for the fireworks for NVIDIA tomorrow.
Joel, I want to jump over to earnings here real quick, but I just want to mention a couple quick other movers here. We might circle back around to these later in the show. CIFR, the Cipher Mining, they had some poor guidance, stock trading lower here. Also, Whirlpool had an offering last night, and the stock's trading down sharply lower on that. At least it was last night. Let's get to earnings, though, here. Home Depot, ticker HD, reporting a decent beat on the bottom line for the quarter. They reported Q4 adjusted earnings $272. Analysts were at $254. Sales beat pretty modestly, $38.2 billion. Analysts were at about $38.1 billion. The guidance was in line to a little weak. They're expecting 2026 earnings $14.69 to $15.28. Analysts are at about $15.05. The sales guidance was a little weak. They're expecting 2026 sales $168.8 to $172 billion. Analysts are up closer to $171.3 billion. So kind of weak guidance here from Home Depot. Joel, any thoughts on the quarter or looking at the chart?
Looking at the chart, I see that you did get a pop here to 390, 393. I just have to focus on this area for today because, 4 highs in a row. Those 4 highs in a row were circling a very narrow area as far as a $400 stock goes. And those 4 highs, let's just call it, you had one little blip to 97.63, but right now, my big number, if you want to get really bullish here, and we're breaking out, we're going back to the, over 400. I like to see what happens at 394. That's an exact double top from February 13th and February 17th. You've leaked off that level short of the pre-market high. Let's see where the rally takes you. On a day like this, after you trade higher, don't see much of a knee-jerk reaction lower. If you start to come in on this, the top of yesterday's range is not that far away. 84.14 was the top of yesterday's range. And then if you really start to leak here, 76.99, 376.99 is the close in Home Depot today, or from yesterday.
And just a little color from the Home Depot CEO, Ted Decker, on the quarter. For the fourth quarter, our results were largely in line with our expectations, reflecting the lack of storm activity in the third quarter. That's interesting that he said that. And also ongoing consumer uncertainty and pressure in housing. Adjusting for storms, underlying demand was relatively stable throughout the year. Any quick response to what Home Depot CEO Ted Decker was saying there, Joel, about the quarter?
They're going to be selling a lot of shovels on the East Coast next quarter.
I think that, when an exec is like pointing to, something like a lack of storm activity, I mean, I guess they have to, model for that when they're going into their quarters, but also it's a bit of an excuse, it sounds like, right?
Yeah, I mean, I just don't know. I go into those places and I just, they selling stuff for 98 cents, a buck 40. They have 50 people working there. I mean, I know they have more expensive items and stuff. It just, it's where's the consumer? So far, the
Yeah.
consumer hasn't given in, right? Maybe they're not buying huge houses. Maybe they're not fixing up houses as much as Home Depot would like them to. But they are going on cruises. They are doing things. So technically, I mean, yeah, you're right. That comment is something to it keep an eye on. But for now, keeping an eye. Let's see. Let's get Home Depot through this 394 area and establish a bid. That's what I'm looking at. Don't forget, Lowe's comes out with earnings tomorrow as well. And let me look at the longer term. Lowe's has been a little bit better performer here. Lowe's actually hit a new all-time high this month. So a little bit of divergence in those stocks.
All right. I want to hit on just a couple more, maybe just one more earnings report here before we get our guests. I want to should we do BWXT, Joel, or should we do the Keysight?
BWXT.
Okay, cool. This is a maker of nuclear components, so it is, it's not even tangential to nuclear. They're component makers, so it is an important company in the context of the nuclear discussion. Not a stock that we talk about a ton, but I want to stop here and just take a quick little look at it. Company reported a strong quarter. Q4 earnings of $1.08 versus an 88-cent estimate. Sales were solid at $885 million versus an $850 million estimate. Guidance was really strong, 455 to 470 for the 2026 earnings. Analysts were all the way down under 430, and they're expecting sales 3.75 to 3.6 billion for BWXT. Stock here trading up about 7 or 8% this morning.
Yeah, scattered trades here and there, but trading up very nicely, up 1462 on only 15,000 shares. Let me see the volume. This trades less than 1 million shares, so not super thin. I think the only thing I'd alert people to was, yeah, you got the all-time high there, hit 220. That's your major level. Just I don't know about, are people saying, boy, I'm getting my money back from these 2 days? You
Right.
had a pretty big decline from 208, 209.07 up to 198.38. You're quickly getting it back. Catch this one off the open and look for this all-time high, which comes in at a double top, 220.57. Got there again at 219.85. So let's see if he's got the gas to get up there to the all-time high. All right, we're going to go to our guest here a few minutes early. The CIO over at NewEdge Wealth, that is Cameron Dawson, coming on the stage right now. Good morning, Cameron.
Good morning, guys. How are you?
Oh man, we're so worried about AI.
Surprise.
Surprise. Yeah. I'm working on a piece now about it, and it's the Motion City soundtrack song, The Future Freaks Me Out.
Okay, so are you going to give us a little calm here? It sounds like you're not going to give us calm if that's the title of...
Well, it's actually, we're going to use a second Motion City soundtrack song to follow it up, which is that everything is all right. So
makes me feel better.
At the end of the day, you can understand the source of the consternation. After all, if you look at the US economy, it's 2/3 driven by consumption. And then if you look at the source of job growth or jobs overall, it's 70 to 80% in services. And so when we distill it down, it's not surprising to see people grow concerned, simply because if you have something that could potentially challenge a massive services sector in the US as we've moved away from this, into this post-industrialized type of world, no wonder you have some of this concern. The question is, does it happen today? How far is it in the future? And what should we be pricing in as far as disruption into today's prices?
Mm-hmm.
All right. So I know you do the songs, but we also got some big movie fans here, right? Dodgeball, right? You know,
Well, if
dodge.
you
I
can
don't want
dodge
to
a
mess
punch, you
them
can
up,
dodge a
right?
ball.
Man, this market, if you talk about, ditch, dive, duck, I mean, that's what you got. We got a duck market here, losing a lot of the leadership, but man, it feels like we should be a lot lower, but we're not.
Well, for the record, Joel, the 5 Ds of dodgeball are dodge, dip, duck, dive, and dodge. So just to note that, the duck market that we've been talking about, it's not just a duck away from some of the potential disruptions that we have seen. As we said, it's kind of like that meme of the Grim Reaper coming and knocking on every door and leaving this bloody trail, depending on which industry is in the crosshairs of AI. But what we've been seeing is that on the surface, things just look calm in the market. If you look at whether it's the equal weight S&P 500, you look at the cap weighted index, just a couple percentage points off of all-time highs. And that really belies the chaos that we are seeing underneath. And you can see the chaos by looking at statistics like how you have the greatest dispersion between winners and losers this year in the market. You also have the most number of names outperforming the index in the last 5 decades. And I think what's really fascinating about these points of all this rotational move under the surface of the market, and we call it a duck because it's like a duck is calm on the top and then pedals its little legs underneath, is that if you think about sentiment paired with all of this rotation, it doesn't necessarily seem to line up well. Given the fact that not only have returns been effectively flat for the last 4 months, but you're also in an environment where sentiment, where a lot of the popular trades, whether it's high flying tech momentum names, or you could even go into the retail side of things with things like Bitcoin and even some of the volatility in precious metals, to have all of this disruption and still have sentiment measures that look fairly ebullient seems to be a disconnect. So we wouldn't be surprised if effectively some of this sentiment has to be dulled a bit effectively, where you see people be disillusioned a little bit with some of their more optimistic notions before this ultimate chop and churn works its way out.
Okay, so we're holding up here, right? We're not caving in. We got this vicious rotation going on, and looking at the breath, I mean, still looking pretty good, right?
Yeah, I think that's what's been fascinating, is that, typically if you go back to the last time we saw market weakness, let's say at the end of 2024 into the beginning of 2025, you had been seeing this really big, huge breadth deterioration, meaning that the overall market was being held up by just a small portion of names at the tippy top of the market that were strong and also large weights. The exact opposite is happening now, where the market is being held up by a much broader set of names, but it's the weakness being concentrated in the top portions, largest concentrations in the market. I think one of the biggest questions to ask, though, and we've been calling it the reverse Three Little Pigs. So, in the Three Little Pigs, where they start in a straw house, and then they go to a sticks house, and then they eventually go to a bricks house, each one getting safer and safer and safer from the big bad wolf. What we've seen in this environment where AI is the big bad wolf, people are rotating out of what were typically very safe areas of the markets, your typically brick house of the recurring revenue software names, etc., and they're rotating into things that are riskier, Think about rotating into industrials, materials, energy names. These are names that are more capital intensive. They're lower margin businesses. They typically have more leverage. Not all of them. A lot of the balance sheets have been improved significantly over the last decade or so. But the point is that you're swapping a set of risks associated with AI in one area and rotating into a new set of risks in these more cyclical industries that I would add have now become momentum stocks. So now you're trading, a name like CAT at 32 times forward. You're trading a Walmart at 45 times. You have the highest valuation for the Staples Index. Obviously not a cyclical, but a defensive area, but the highest valuation since 1999. So you have seen this rotation that's helped keep the market afloat. But at the end of the day, investors have effectively swapped one risk for a different risk. And what we're asking in that reverse three little pigs is that, are you effectively moving, instead of from sticks to bricks, or are you now moving from bricks to sticks in your safety?
Our leadership is lagging with the Nasdaq here, right? You could call the November a relative top. People like to look at moving averages, the 50-day, the 200-day. I mean, what do you look at? I mean, we're holding. We got to earnings season. Talk about the technicals on the Nasdaq 100.
Yeah, we've been able to hold, or were able to hold this 100-day moving average. I believe it broke yesterday. I didn't check, so pardon me for not being on top of my daily chart game, as I ran these yesterday in the morning before the open. But we're about to test that 200-day moving average. That's of course been a very important support line. If that does not hold, we wouldn't be surprised if we saw a retest of the pre-liberation day highs, effectively the February highs from 2025. At that point, you probably would get to a level where you would have oversold readings within the Nasdaq. And of course, the question is this some kind of broader top where you're below the 200-day moving average? Chris Verone always says mistakes happen when you're below the 200-day. Do we see ourselves carve out a series of lower highs and lower lows, which is what happened, of course, back in 2022, as we stayed in a downtrend for effectively 10 months over the course of that year? Or is this yet another buying opportunity where you get oversold and you V-shape and you're back off to the races? So we'll be looking very closely at the technicals as we get closer, looking for signs of flush, looking for signs of capitulation. One thing to note, software, for example, certainly looks deeply oversold. We've seen headlines about just sell everything, indiscriminate selling, everything going down. If you look at breadth measures within software, they all suggest that you've gotten to this point of a washout and a point of a capitulation. Except for the fact that you have seen big inflows into software over the course of the last 2 weeks. So I think that chart is in the deck, and we use Dennis from It's Always Sunny in Philadelphia to capture that. So
Nice.
Remember when Dennis is trying to make his own jorts, and he cuts them off really short, so he has more leg mobility, and he says, I can go lower. That seems to be what software stocks are doing when it comes to people trying to buy the dip in them, which also suggests that there's still quite a bit of length to work its way out of these names.
Okay, so if software didn't add a level of uncertainty here to the markets, what about the tariffs that we just got last week? Is that any way to soothe our fears about tariff uncertainty right now?
I think that the old song, I believe it was a Gershwin song, "Love is here to stay." I think tariffs are here to stay. Tariff uncertainty is here to stay. We think about these Section 122 tariffs. We're not going to get any certainty as to whether they can stick or not for 150 days, or they stay in place for 150 days. Remember, for those to be made permanent, you have to see Congress support them. Really hard for Congress to justify or support these tariffs. We know that There's been votes against the tariffs in Congress already. You're in a midterm election season. Affordability is an issue. If you look at the statistics about things like real wage growth, some signs of goods inflation, falling wages, all suggest that making the case for tariffs is really, really difficult if you're a congressperson. So we don't think that as of right now the Section 122 tariffs will stick. But then, of course, you have the longer kind of investigation tariffs, like the 301s, for example, which will take time. They can take 9 months, 12 months to do the investigation. So if you were hoping for clarity, unfortunately, that's certainly not what you were going to get. And the question is, what does that lack of clarity mean? I think there's two key things. One, it likely means that if you were planning on making hiring or investment decisions, those could get delayed further. And two, expect more distortions in the GDP data. So as you think about GDP data over the course of the next few quarters, it's really important to look at that final demand to domestic purchasers, which is a version of GDP that takes out the import-export as well as the inventory dynamics. Watch that one, because that will be the sign about the real underlying demand in the U.S. economy versus all this stuff that's being whipsawed around because of trade and tariffs.
Cameron, Capex spending. Big subject of debate here. You're seeing AMD being rewarded today. Other chip makers that were left out getting hit. What are the CIOs? I mean, we're spending a lot. We're spending a lot of money. Those spends from Amazon and Google. I mean, when are we going to see the returns? Are we overspending here on the CapEx?
Well, you flashed it up there. It seems like a lot of people are thinking that overspend is already here. And in the charts, we think it's important to note that you look at the AI infrastructure Capex beneficiaries, like a name like NVIDIA, who's been the greatest beneficiary of AI Capex over the course of the last 3 years. Take a moment to appreciate NVIDIA's earnings power on a 12-month forward basis has gone up by 16x over the course of the last 3 years. 16x. It's gone from 50 cents a share in earnings power on a 12-month forward basis to nearly $8 a share on a forward basis. So if you were to see, for any reason, names like Google, Microsoft, Amazon, Meta pull back on their Capex spending plans, maybe not in 26, but potentially in 27. Let's play it out. Let's say that maybe 2026 is the peak in Capex spend on this AI infrastructure. Then it would suggest that the peak in earnings for NVIDIA could be closer than maybe people are expecting. You can still, or peak in earnings growth. Sorry, that second derivative is really important. And I think that's fascinating when we put in the context of where NVIDIA is trading. It's trading at 24 times earnings. And a lot of people will say, well, it's so cheap. It's cheap compared to the last 2 years. What that misses is the point that NVIDIA trades with a counter-cyclical multiple. Like industrials are very similar. You put the highest multiple on the lowest earnings, the lowest multiple on the highest earnings. When you trade at a low multiple for a name that is cyclical, like an NVIDIA or a name that's, or areas like the industrials, as I mentioned, you're effectively saying that earnings are near their peak, whether they're an absolute peak or a peak growth rate. Can be debated and similar, but the whole point is that the market is saying, hey, maybe 2026 is the peak in the year-over-year growth rate in some of this spending, and that we could start to ebb and move lower. One last point on that. If these stocks keep going down, by these stocks I mean the hyperscalers, the big mega cap mag 7 names, I think it will become increasingly hard for them to justify the kind of spend that they are doing on AI Capex, which just means that if your stock is down 40%, you're not increasing your Capex targets. You're probably decreasing them. But it becomes kind of a prisoner's dilemma kind of situation, right? Because right now the equilibrium is for them all to collude and spend as much as possible. But if one person starts to defect, classic prisoner's dilemma, one person starts to defect, cut their spending, you could see that cascade lower. So I don't mean to be so doomsday, but something we're watching.
And of course, we do have the big NVIDIA report tomorrow afternoon. How are you positioning ahead of NVIDIA's report?
Well, I think it all comes down to the question of whether or not the earnings power that they are generating, which I mentioned is 16 times higher than it was 3 years ago, is something that should be capitalized into perpetuity. If you look at, remember, NVIDIA exists in the future. They're reporting their fourth quarter 2026 numbers. So they're about to start their fiscal 2027. And so we look at fiscal 27 and fiscal 28, people are still expecting great growth for NVIDIA for earnings and continued upside. The question is, do people start to challenge or question that if some of this AI infrastructure starts to come under pressure? So obviously, NVIDIA is the king of beats and raises. The bigger question is, what's the response to that? And is it enough of a beat and raise to kind of restoke optimism? One last note is that NVIDIA has multiple times had periods of 4, 5, 6 month long consolidations before launching higher. So the consolidation we've been in for the last 6 months is not out of the ordinary, but it's certainly something that is obviously a key source of debate, given the fact that it's been a key source of upside for this market.
One thing that's been hard to ignore this year is the performance of non-US markets, right? European markets. Is there anything still cheap out there?
No, nothing's cheap. Nothing's cheap. It's like Dolly Parton once said, it costs a lot of money to look this cheap. Nothing looks cheap right now. We're in an environment where you've seen a big re-rating. If we walk it back to the beginning of 2025, most of these non-US markets were trading in effectively the 50th percentile of their longer term historical ranges. Now they're closer to the 90th percentile. So you've seen big re-ratings. And the question is, now that you've re-rated, do you go back to higher multiples that actually close the gap between the US and international? Fun fact, in 2005, 2006, international markets actually traded at a premium to the US. Now, that seems like an age away, but the reason is because you were derating US markets because of the tech exposure and re-rating international markets because of the exposure to the real economy, because you had a commodity super cycle, you had the infrastructure build out in China. So all of this raises the question of, do we get a repeat of that early 2000s kind of scenario? And I think it's something that's up for debate. So the markets aren't as cheap as they used to be. And now you have the S&P 500 on an equal weight basis, trading actually at its lowest discount in a decade versus international markets. So, maybe you can make some argument for a reversion trade, but certainly you still have discounts on a relative basis on a cap weighted side of things, simply because of the still expensive US cap weighted market.
What about China?
I don't know. I mean, China has not been the source of the key upside for international markets over the course of the last, let's call it 18 months. The upside in international markets has come from things like South Korea. Now, South Korea, you have to be appreciative of the fact that 40% of it is Samsung and SK Hynix. But if you look at Hyundai and you look at Kia, like all of the stocks, even shipping companies, banks within South Korea, have all gone parabolic to start the year. But look at the strength in things like UK markets. You can look at strength in Brazilian markets. There are a lot of pockets of international that have had extraordinary starts to 2026, but China hasn't necessarily been one of those.
Okay, Cameron, one last thing I want to ask you about is the biggest risk asset of all there and the implications for the market in the decline in Bitcoin.
Yeah, I mean, if you see Bitcoin as a reflection of liquidity in the market, it suggests that liquidity has become incrementally more scarce over the course of the last 6 months, let's call it, than it was, which suggests that we should not be surprised that equity markets are derating in that environment. When liquidity is scarce, you typically see multiple compression. So if Bitcoin is sending that message about liquidity scarcity, it certainly is now being reflected in equity markets as well.
All right, Cameron Dawson, CIO NewEdge Wealth, joining us here on Pre-Market Prep for extended interview. Cameron, we appreciate your time and your input. We'll be talking to you again soon.
Thanks, guys.
Okay, a little bit of a rally. Let me get rid of this here. The state of I'm just gonna call it the state of the pre-state of the union rally. Can I call that it? Can I call it that, Brent? Is anybody
Yeah.
else calling that?
I liked when you said it earlier. Yes. I want to break in with some Intuit news about. It was at 8 a.m. Stock moved about $20 higher. Intuit and Anthropic partnered to bring trusted financial intelligence and custom AI agents to consumers and businesses. Just kind of reading this press release here. A multi-year, game-changing partnership to bring custom agents to mid-market businesses on the Intuit platform. The market is shooting first and asking questions on Intuit to the upside here. Let me pull up your chart here on Intuit, Joel.
Well, I guess this is what you want to see, right? If you're one of these companies, you want to see AI adoption. We've said, people aren't going to lose their jobs to AI. There are people that are not going to adapt to AI. Well, maybe Intuit is doing it. I mean, you want to talk about overhead supply in this stock. I mean, there are bag holders central. We were at 650 at the beginning of in early January. We just hit 350. The best number I can give you here is the pre-market high at 391.98. We could call, let's see, get through 392.96. That's your 2-day high. Wide open here for days and for weeks, almost the whole year. People have been able to buy this on weakness. Well, that's not, at least as we speak right now, unless people just come in to hammer this off the open. Now you're buying into strength. You're buying into a rising market. If you're an owner of Intuit, this is what you want to hear. What the implications are going to be farther on down the line, I don't know. But, if you had a major short on this one, the complexion of the market is now changed. You're going to have to be buying, at least for today, into a rising market.
Intuit says they will deploy Claude Code across its engineering organization to further accelerate development. I wonder, Joel, if Intuit and maybe Claude timed out this news ahead of this event that's going to be starting at 9:30 p.m. Could we see other releases like this in the next half hour? I would definitely keep our eyes for more releases ahead of that Claude Code event.
Yeah,
again
just
at
like the
9:30.
CES, the way you guys did a fantastic job
Exactly.
previewing, the CES and what companies are going to be talking about. When you talk about healthcare conferences and things like that, exactly. That's
Catalyst
exactly the
driven.
same kind of scenario
Yep,
that you're going
for
to be
sure.
witnessing today during the Claude event.
All right, let's do a couple quick ratings, Joel. All right, so I'm going to pull up my fly here in just a second. We have a couple highlights here. Let's start with Owl. We talked about Blue Owl a little bit earlier. Owl was downgraded this morning at Deutsche Bank. I'll pull up some color here from the Owl rating. And I'm just going to share my screen. We'll take a little peek into the Fly platform. Let me share my screen. Take yours down and share my screen, Joel.
Okay.
Blue Owl Capital downgraded from buy to hold at Deutsche Bank. Analyst Brian Bedell downgrading. Firm reduced estimates across the alternative asset manager group to reflect a more challenging environment for net flows into retail private credit products. Deutsche cuts its price target, more notably for Blue Owl, prompting the downgrade to hold. Bit of a lame call here, Joel, but this is highlighting a bigger topic that we've been discussing. How would you rate this rating, Joel?
A TY. Thank you. Thank you for the downgrade. After all this chaos here, down from 16 and down to $10, you're downgrading it now. I mean, it's out of favor. It's been getting hit. It's a downgrade. I mean, you can either, short it in a hole, which has been working in a lot of stocks, or you can say, man, these guys are too late to the party. I'm going to try and buy the dip here. But This one definitely looking at a longer time frame here. Man, is this an all-time low here for OWL? Wow, man. So want to fade it? You could nope, not an all-time low. The next monthly support that comes in under $10 here. $10 was a level 4 times in late 22 and 2023. So use it. Use it as you want. I mean, you just have to look at some of these other charts of these private credit, and it's not where you want to be.
Triple D in the background here mentioning that KKR and Blackstone, BX both been destroyed. Private credit has been murdered. A direct quote from Triple D in the background. He doesn't have a voice, but he still has fingers to type us little hints. Thanks, Triple D, for that. Let's do one more quick rating here, unless you want to talk about KKR or BX real quick, Joel.
Sure.
One more quick rating. Let's do Qualcomm. Let me show my screen. We'll take a little peek here. Qualcomm was... Gotta pull yours down, add mine. Qualcomm upgraded to buy at Loop Capital. According to the analysts, the underperformance year to date in Qualcomm shares has been fueled by a perfect storm of circumstances, but memory chips won't remain in short supply forever, and the smartphone market should recover and normalize from the initial shock. I'll just stop right there and get you maybe to comment, Joel, on that little piece of color. Memory chips won't remain in short supply forever. What do you think about that comment right there, Joel?
Well, if they keep raising prices like they do, maybe people but I'll give this one an R because
Okay,
I
what does R
respect
mean?
this call.
You respect this call.
I
Okay.
respect it. Yep. Trying to buy the dip, coming off the low. You're coming to an area of resistance here, actually matching highs from yesterday. I think the party gets started if you could clear like 144 or 144 and a quarter. You did briefly in the pre-market here, so I think I would be a little more tempted to go with the rating in this one as opposed to fade it immediately.
Just a little heads up here. We are going to be getting Lisa Su, CEO of AMD, on CNBC. Triple D again giving us a little heads up here. I'm sure she's going to talk about the deal this morning. So just a little heads up that they're, CNBC gets some attention. Keep that on your radar.
Okay. That's it, Bradster here, 9:02. We went a little bit over time, but covering, you know what? You don't want to hear us. You want to hear Claude at 9:30, folks. So thanks for joining us on Pre-Market Prep.